This is David Russell, Global Head of Market Strategy for TradeStation. And today we'll look at major events for investors and traders. Last week's news wasn't great, but it was good enough to stop the bears. The S&P 500 rose 0.5% between Friday, April 26th and Friday, May 3rd. At one point, the index was down as much as 2%, only to snap back in the last two sessions. Yields also fell, and the U.S. dollar weakened. Federal Reserve Chair Jerome Powell said on Wednesday that it's unlikely the next interest rate move would be a hike. He added that recent increases in inflation are not persuasive evidence that interest rates need to go higher. The central bank also plans to shrink its balance sheet by $25 billion a month instead of $60 billion. That has a net effect of easing policy. The next big event came on Friday, when non-farm payrolls missed estimates for the first time in 6 months. Unemployment and wage growth were also lower than expected. That also made investors think the Fed is on a path toward lower interest rates. The Fed meeting and weak job report offset other potentially bearish news last week, like a higher employment cost index and disappointing productivity. Another big positive last week was Apple's fiscal second quarter earnings report. The iPhone maker managed to keep its earnings flat from the previous year, despite revenue shrinking by 4%. Services bolstered profitability by adding nearly $3 billion of revenue and trimming $7 million of costs. Apple also repurchased 2.4% of its shares and announced $110 billion more in buybacks. It was the biggest buyback announcement ever, according to Reuters and CNBC. At least two other items lifted the stock. First, business in China shrank less than feared. Second, artificial intelligence could be coming to the iPhone. CEO Tim Cook said he continues to feel very bullish about the company's opportunity in generative AI. He plans to share some new technology soon, which he says will differentiate Apple in this new era. Several analysts predicted the tech giant will unveil AI technology between June 10th and 14th at its worldwide developer conference that creates a potential catalyst into the event. Last week was unusual because biotechnology, Chinese stocks, and solar energy rose the most. Those groups have mostly lagged for years. Banks and utilities also climbed. It was an odd mix, but they shared the common theme of benefiting from potential rate cuts. Energy and commodities, on the other hand, pulled back. Crude oil had its worst week in 3 months, and precious metals continued lower. Financials and industrial stocks lagged, which is consistent given the shift towards smaller growth areas, like biotechnology. For example, the S&P 500's biggest gainer last week was Biotechne. The life science company jumped after earnings and revenue beat estimates. It's still down 7% in the last year and is barely positive since December. Moderna lost more than 80% of its value between August 2021 and October 2023, but just had its best week in over a year. Revenue beat consensus by 35% as the vaccine developer looks to evolve past its initial surge from coronavirus. Howmet Aerospace jumped to a new all-time high after results and guidance surprised to the upside. S&P 500 earnings are up about 5% so far this quarter, according to FactSet. It's the strongest growth in 2 years, and an improvement from the 3.4% increase forecast at the end of March. And now let's chart the market. The S&P 500 ended last week at its highest level since April 11. The index is back near its 50-day moving average, a potentially important trend indicator. It also made a higher low, which may confirm the early April pullback is nearing an end. Some internals calculated by TradeStation could also suggest that conditions are improving. More than half the index's members closed above their 20-day moving averages. The number of new 52-week highs is climbing again, while the lows are falling. The 10-year Treasury yields chart was perhaps more important because higher borrowing costs have weighed on sentiment since late 2021. Last week, the yield stalled around 4.7%, a key level from early November. If the yield remains below that point, it would represent a lower high on the weekly chart. That could be an early sign of interest rates potentially peaking. We'll now turn to the current week, which has fewer important economic events and earnings. However, several officials on the Fed's Monetary Committee speak. Today features Thomas Barkin and John Williams. Palantir Technologies announces results after the closing bell. Walt Disney, Wynn Resorts, and Arista Networks report earnings tomorrow. There's a 10-year Treasury auction on Wednesday. While normally not important, it could have an impact on borrowing costs. Fed officials Philip Jefferson and Lisa Cook speak. Crude oil inventories are also due. Uber Technologies and Airbnb issue quarterly numbers. Thursday brings initial jobless claims. Consumer sentiment is on Friday, which also has speeches by Michelle Bowman and Michael Barr. Thanks for watching. Please visit tradestation.com for more.